right. Thank you, Travis, for the intro. And what I want to talk to you guys today is about Trafigura. And again, Travis, excellent pronunciation. With that, we're going to share my screen there. So there's Trafigura. Now, real quick, if you're not familiar with this company, these guys are huge. They're not publicly traded. It's privately owned. It's owned by its employees. They're one of the biggest commodities trading funds in the world. These guys move literally boatloads of metals and energy all over the place, everywhere. All right. So big trouble at Trafigura could mean big trouble in other places. And this story that I'm going to talk about, I first caught wind of this one on Wednesday this week during one of my morning live streams over at my channel, Nobody Special Finance, shameless self-promotion. And that story slowly got more and more developed over the course of the day. And this ends up being a pretty big deal, and we still don't know what's causing it. That's another important thing, is there's a lot of speculation about what's going on over at Trafigura, but nobody is saying exactly what the problem is. So this all starts Wednesday with this article in Bloomberg. Now, Trafigura reported earnings, and the headline, Trafigura profit drops 73% as trading boom cycle fades. Now, this was actually an earnings beat for Trafigura. Their earnings were better than expected. And that 73% drop in earnings really wasn't that big of a deal because everybody was expecting it. There was this big commodities boom in 2022 with the Russian invasion of Ukraine, and energy prices and food prices, everything just boomed. And the way commodity prices work, people buy their commodities several months out ahead. And so really last year, we saw the main impact for Trafigura from the Russian invasion in 2022. And so that is now worn off. And so year over year, Trafigura has seen a big drop in their earnings as commodity prices have come down from those obscene highs that we saw immediately following the invasion. But that wasn't the story. I mean, I was reading through this story. Okay, this seems like a no, never mind. But as I've often learned, sometimes the best tidbits of information are hiding in the last paragraphs at Bloomberg. Bloomberg does this. They put the best nugget in those last one or two paragraphs, and this article did not disappoint. The company noted on Thursday that some clients were having payment problems due to high commodity prices. Invoices more than 60 days overdue were 16% at the end of March, up from 5% last September. So 60-day overdue invoices more than tripled just since September, and they're saying at the end of March. So in 6 months, customers having trouble paying Trafigura have tripled here. Now, this is when it got even worse. Expected credit losses on receivables also rose to $330.2 million from $3.3 million at the end of September. So rather than the threefold increase in the delinquencies and the 60 days overdue, now Trafigura is saying they expect people to not pay them. Not only are a lot of people overdue, but we expect $330 million worth of non-payment here. And that's up over 100-fold from just September. So in the last 6 months, or now really the last 9 months, because we're here in June, something is going on with Trafigura's customers. A lot of them are not paying. The losses applied to several counterparties in a number of different countries, Trafigura said. And that sentence is very important as well, because that rules out that, hey, maybe it was like this one firm that blew up and they took all this credit with them. You know, I'm thinking like an Archegos or some big miner goes under, but they're not saying that here. They're saying the losses applied to several counterparties in a number of different countries. So it's all over the world and several companies. We're starting to talk about counterparty risk in the commodity space here. And they're saying if you look at commodity prices where they are today, they're not the lowest. So that means that importing countries from time to time will have issues in their payment profile. That was according to Steven Jansma, who is succeeding the CFO. He's their new CFO over at Trafigura, he said in a recording. So there's big trouble going on with Trafigura's customers here. And then we got a little bit more a few hours later on that day. You know, again, this was at the very end of an article about an earnings beat for Trafigura. Well, later that day, they added a little more information about this. When we got this article on Bloomberg, Trafigura has a $1.7 billion headache after a surge in overdue debts. And now the numbers are getting bigger here. Now they're saying $1.7 billion. We were talking $330 million just a few hours ago. A solid headline profit for commodity trading giant Trafigura Group masked something unusual beneath the surface. A significant chunk of its customers have stopped paying. Trafigura was owed $10.5 billion by trade debtors at the end of March. Its half-yearly report showed on Thursday. Now, that's not unusual for the commodity trading giant, which sells hundreds of billions of dollars worth of oil, gas, and metals every year. But this time, a much larger proportion of them were late paying, Trafigura said. And this is when they go on to the 16% of receivables being 60 days late. Now, if you blow up that chart, this one is showing the overdue receivables, those 60-day past due invoices. Now, this chart, not so alarming, right? I mean, we were higher in 2016 with overdue invoices, and Trafigura didn't blow up back then. So, when I saw this first chart, I'm thinking, all right, maybe things aren't that bad over at Trafigura. But then as you go back to the article and you start reading more, now they're starting to talk about those expected credit losses, how they went from 3.3 million in September to 330 million in March, a 100-fold increase. And they go on to provide a little bit of historical context for just how significant that is. In more than a decade of Trafigura's accounts that are public information, the company's expected credit loss on its receivables has never been higher than $6 million. It's 330.2 million now. It's never been higher than 6 million before. So when you look at that chart now, they put that in context. Let's blow that one up a little bit here. Now here's Trafigura's expected credit losses. And this chart is kind of what made me say, whoa, something is majorly wrong in the commodity space here. All right, so remember from the previous chart, okay, 2016 wasn't so bad. They had a lot of overdue receivables back then. But if you look at 2016 on the credit losses, everybody paid back in 2016. So they were late, but they paid. What Trafigura is saying here is everybody's late and they're not going to pay. They're already taking the hit in the expected credit losses, which means they're writing down that accounts receivable. So something is majorly wrong in the commodity space right now. Now, most commodity trade across the whole world happens in US dollars. It doesn't really affect us so much. We pay for oil in our native currency here in the States. But if you're a country overseas in emerging markets, before you can buy food, before you can buy copper, before you can buy gold or oil or natural gas, first you need to buy dollars. Then you can buy your copper because all of this global trade happens in dollars. So keep in mind what we're seeing here with everybody failing to pay. This is a dollar shortage starting in several places across the world. And remember, Trafigura told us this isn't one company from one country. This is several companies spread across multiple different countries in the world. So there is an emerging dollar shortage happening in the commodities market. So far, it's only impacting Trafigura. We haven't heard anything from any of the other ones, but this could be a very big deal. Now, I went and I tried to find a couple of examples of, maybe what might be causing this. And I did find a couple of stories that might be giving us a hint at what's going on. There's a lot of losses. Trafigura, this story was back in February. Trafigura faces Mongolia oil losses in new blow for the trading giant. So it's possible the oil trade in Mongolia is playing a role here. Mongolia has been pretty famous because, number one, it's the second biggest landlocked country in the world. Mongolia doesn't have any coastline, and yet somehow they're operating a huge fleet of oil tankers now because when the Russian oil sanctions were passed, a lot of companies were no longer able to transact for Russian oil. So Mongolia they're calling it a shadow fleet, where there's vessels owned by foreign companies are now sailing under the flag of Mongolia, and they're meeting out in the middle of the ocean with Russian oil tankers, transferring the cargo, and then that oil is being sold into Western markets in violation of U.S. sanctions. So Mongolia is expecting to take a lot of losses from oil trades. Now, nobody is saying what's going on here, but it's entirely plausible that the Western governments are starting to crack down on this shadow fleet that is helping to sell Russian oil into U.S. markets. And if that's the case, then those Mongolian companies won't be getting paid for that, and then they won't be able to pay Trafigura for that. So it's possible that's what's going on here. Also, Mongolia bought almost all of their oil from Russia before the sanctions went into place. And there's a lot of articles about how the Mongolian economy is struggling now because planes won't fly over Mongolia anymore because you have to fly over Russia if you're flying over Mongolia. And so the Mongolian economy used to collect a lot of fees from airlines for flying over their airspace. That revenue has been cut off. The energy trade has been complicated. So the Mongolian economy has really been hurt by the Russian sanctions. It's possible that's at play here. We've also had a big nickel fraud in the last year or so. Alleged $600 million nickel fraudster can't pay his bills. Trafigura was caught up in this one. There was this guy named Gupta who was trading in the nickel markets, delivering nickel futures. And it turns out instead of metal, they were bags of spray painted rocks. And this was a several $100 million fraud. There's been lawsuits in every different direction, and Trafigura was one of the companies involved there. So it's possible this big nickel fraud is also contributing to Trafigura's problems. And then there's the scarier scenario here. And that scarier scenario is countries like Turkey, countries like Sri Lanka, like Lebanon, countries that are reliant on imports. And a lot of these countries have had runaway inflation in their native currencies over the last few years. And they've been dumping their dollar reserves like gangbusters to try to prop up their native currencies in the Forex markets. And if those countries are now running out of dollar reserves, then they won't have the dollars they need to buy their commodities. So this is one of the reasons why I kind of latched on to this topic, was this could be the early indications of a dollar shortage in the global commodities market. And if that's the case, a dollar shortage, that's going to start to mean things like a much higher DXY, the US dollar index, like much higher interest rates for US dollar denominated debt. And that could have real impacts on everything from your credit card to mortgage rates to stock valuations, gold and silver prices, oil prices. The dollar is the lubricant of the global economy. And if we run low on lubricant, it's really going to slow down trade. And that's what I got for you guys on Trafigura.
Yeah, so very interesting, Jack. Couple of things, like I'll be talking about Mongolia as well when we talk about China, and a very interesting ghost city that Al Jazeera did a story on in 2011. But dollar shortage, I think this is really important because that sounds kind of, oh, you're just short a couple of dollars, right? But in reality, when you look back at the GFC, it wasn't subprime mortgages that caused these credit meltdowns and events. It was a dollar shortage. You know, when people turned around and said, hey, you know, Bayer, Lehman, you guys owe a certain amount, and they didn't have the collateral anymore, or dollars equals collateral. So this could be a really big story, Jack, that's kind of hiding, like you say, in these paragraphs. So, you know, in your opinion, do you think this could play out faster? We heard about that nickel story with Chase. What was that, a year ago, 2 years ago, where they opened the vaults and it's like, oh, we thought we had all this nickel, but in reality, there's nothing there. And that's very much right. The bezel that we talk about, like the fraud embedded in this economy. But, you know, this may have been playing out for a long time, but do you think that things might accelerate here quickly?
So far, this story is limited to Trafigura, and Trafigura has had that Mongolian story and that nickel story. So far, no, I'm not totally freaked out by this. Now, if we, in the next few days or weeks, if we start to hear about Cargill having the same problem, then yeah, now it's a pattern. Now it's potentially a systemic thing. So right now it's limited to Trafigura. So I don't want to overdo it with the doom here. Let's rein in the doom a little bit. Right now it's just an isolated case, but it's a big isolated case, a 100-fold increase in expected credit losses on those receivables. Doubling, tripling is a big deal. A 100-fold increase. You're talking exponential rises in non-payment and counterparty risk. That's potentially huge. And, guys, there's this massive market of Forex swaps that's out there. And, it's basically, company A has dollars, company B has euros, and they just swap based on the current exchange rate. And the funny thing about those is they're balance sheet neutral, and they don't happen on balance sheet. And nobody really knows how big the FX swaps market is. We know it's in the hundreds of trillions, potentially the quadrillions. And the International Monetary Fund has done reports about this, warning that the FX swaps market, if there was ever even the slightest bit of problem in there, it could wipe out some of the biggest firms in the world. And so if we're talking dollar shortages at Trafigura, this is something, if it ever spills over and causes problems in the FX swaps market, that's going to be a really big problem. And the numbers there are so big in the FX swaps market that nobody really knows how to try to analyze or model what that might look like for valuations elsewhere in the economy.
And we know there's been a race on for these metals, right? I mean, in terms of there's so many different, we're at a disadvantage. China has been stockpiling this stuff for some time. And so the commodities market has played a very important role recently. And I think I think there are a lot of people participating in this market. So to me, this is a story we definitely need to keep our eyes on.
Absolutely.
Jack, I got some clarity needed. So I wanted some clarity. Then I have a question for you. But just to reiterate what you were saying, because as I'm sitting here, I'm asking myself, how does what you're saying impact me as a normal, at best, middle-class citizen? How is this impacting me? And essentially, I believe what you're saying is as a result of this dollar shortage that could potentially hurt us as America, even though it's across the world, right? Geopolitical, even though it's across the world, it can hurt us here in America because it puts pressure on rates going up. Is that correct, Jack?
Yes. And let me put the caveat that the dollar shortage, that's me speculating a little bit. All right. I'm seeing this story at Trafigura and I'm speculating that we have a dollar shortage developing. So we haven't confirmed that. But if there is a dollar shortage, and there's early indications that there are, think of dollars in terms of supply and demand like any other product, right? If there's a shortage of it, if the demand exceeds the supply, the price of the dollar starts to go up. And what is the price of money? The price of money is interest rates. And so a dollar shortage means more and more people go try to borrow dollars and start bidding up the interest rates, bidding up the price of those dollars. And when interest rates start to rise in the Forex market or in the dollar market, US Treasuries, everything, that ripples across the whole economy. That's going to eventually affect how much it costs you to borrow on your credit card, how much to borrow for a car, how much to borrow for a house. And of course, a lot of companies right now are struggling with the already higher interest rates. So we've got things like commercial real estate are having trouble. We've got small businesses that are trying to refinance debt in the higher interest rates. So if we get a dollar shortage in the commodity market and we lose control of it, it could result in higher interest rates here at home in every corner of the economy.
And in other words, and also what I'm trying to kind of hammer down here is that, you know, being how the world is right now, so geopolitical, the globalization, I'm just letting people know outside parties can manipulate what's going on in the US, even on Main Street. So we have all these outside parties and not just the government, but corporations. So a lot going on. But my question, Jack, real question was I noticed in that chart that you had pulled up that there was a massive, massive acceleration in overdue invoices that led to losses, unlike 2016. Can you tell us what happened in the last, 6 months? Because we're not even done with 2024. What happened in the last 6 months that caused those overdue invoices to literally skyrocket? What exactly happened, Jack? Was it just oil?
And that's the rub of this story there, Travis, is we don't know. The whole second half of my presentation there was me speculating maybe it's this Mongolian oil thing, which could be related to the Russian sanctions story. Or maybe it's this nickel thing. Or maybe it's this story of the central banks dumping their dollar reserves to try to prop up their currencies, right? We saw trouble in Sri Lanka a few years ago. They didn't have enough dollars and the Sri Lankan rupee was collapsing and it led to food shortages. So all these countries around the world, in emerging markets, and there was some articles where they specifically called out emerging markets at Trafigura, they have been using what dollars they have, selling those dollars to buy their own currency to stop the decline of value of their own currency. And you can do that as long as you have dollars to sell. And if you run out of dollars to sell to prop up your own currency, you also run out of dollars to pay for your oil and to pay for your food and your metal imports. So if that's going on, if it's the central banks running out of Forex reserves, that's an even bigger story then, because now we could potentially be talking about runaway inflation in emerging markets. And, places like Turkey, you've already got 60-70% inflation. So this could really blow up, and again, it's still early innings. It's just limited to Trafigura. But if we see this spread to other commodity traders, then that is a big, big problem.
Jack, I got 4 comments, so we'll try to make our way through this as quickly as possible. There's some good stuff. Here's the first comment right here. Just want to know your thoughts on this. What are your thoughts on this? Russian sanctions are only hurting us, the West? Silly goober.
I would say they're not only hurting us, but I would say they are also hurting us. They're hurting the Russians too. All right. Now, who is hurting more? You're talking propaganda on both sides in the press, and it's really hard to separate that out. But it is a war of attrition economically, and historically speaking, getting involved in a war of attrition with the Russians has not been a winning proposition. Only the Afghans pulled that one off, and well, they kicked our butts too. So yeah, that was my quick answer.
So polarizing, Jack. You're just so polarizing. So I have another one right here. This one's good, man. Is the premeditated dollar shortage going to bring prices up or down for metals and commodities, in your opinion?
So a dollar shortage means a stronger dollar, which puts downward pressure on assets priced in dollars. So if we do get a dollar shortage, that would put downward pressure on oil, gold, and silver because, hey, we can't afford to buy the dollars, so we're going to start buying less gold, buying less oil, which would mean the price of those things start to fall until the buying starts. But the central bank response to a dollar shortage is almost always to lower interest rates and print money, in which case that would abruptly reverse course and send those prices higher. So the big question there isn't so much what would the dollar shortage do, it's what would the central banks do in response to that dollar shortage.
Great. Okay, a couple more here. I got one ending question for Melody. First question for Mr. Watson. Really good guy. I love Mr. Watson. We really hold each other accountable in our Discord, which is to say we beat each other up. Mr. Watson and I, we beat each other up. I love it. We love that type of relationship. I don't want to speak for you, Mr. Watson. Question for Jack. What happened with metals yesterday, which would be Friday, June 7th?
So yesterday morning, we got the non-farm payrolls report. And we'll talk about that a little bit more later on in the stream. But we had more jobs added than expected. 272,000 jobs added was the headline versus 185,000 expected. A stronger labor market right now means probably a less aggressive central bank later this year, which means the cut in interest rates is probably not going to happen as soon as the market was expecting. And that sent the US dollar higher and interest rates higher. And speaking of the effect that we saw of the dollar shortage, what we were trying to anticipate just a minute ago, stronger dollar, higher interest rates usually puts downward pressure on gold and silver prices. And that's what we got yesterday.
We have a little bit of extra time. My guest is here, but we have about 4 minutes. I want to throw this question up. I had a question for Melody, but it was more of a lighthearted thing, making fun of you and I, Jack. But here's a really good one. This is from Nathan. Obviously, we're doing the best I can, but they're saying seriously, guys, seriously, when is the recession going to happen? When does MSN talking heads in the suits, talking heads, start talking about it? Melody?
When they get permission from the administration. So, and I have been conjecturing here recently that I think they're probably going to, the Democrats are probably going to have to pivot on the economy. There are just too many troubling signs of what's happening. They're going to, obviously they don't want to do that. They would rather try and extend and pretend all the way to the election. But I just think we're getting, too many conflicting narratives out there saying that things aren't as rosy as they think. And so when is a recession coming? When, the NBER proclaims it, but I believe it's already here. And honestly, I ascribe to what Danielle DiMartino Booth. I think it started in October or around there.
Jack?
Deficit spending in the United States, new government debt is 7% of GDP right now. 7%. So right now the government is spending money like we're already elbow deep in a recession. And we're not, at least textbook, right? And for the average person on the street, most people would say we're in a recession based on their experience in life. But the government is spending so much money to create the illusion of economic activity. It's not, it's just debt spending, wasteful debt spending, that it looks like we still have GDP growth, and they won't call it a recession until we get 2 consecutive quarters of negative GDP growth. We haven't even had one yet. And a rise in unemployment, which is just starting now. And we'll talk about that more in a little bit. So probably not until after the election will anybody admit we're in a recession.
And we have a little bit of time. So I really appreciate these questions. Melody, we're in the land of imagination right now. It's really fun to live here. Too bad we still have to pay taxes when we wake up out of the land of imagination. But from a scale of 1 to 10, how severe, Melody, will this recession be?
Yeah. So, in many ways, I think I personally believe we've been living in a silent depression since the beginning of the GFC, actually 2007. And so honestly, I think it's pretty severe already. I think if you really look at how much earning power, purchasing power has disappeared. What I would argue is that mainstream media has been very quiet on our living conditions, the labor participation rate, which I'm sure Jack is going to talk about. And so I think things are already pretty bad. If you talk to, the bottom 80%, which is the majority of Americans, how bad is it going to get? I think that depends on what crazy antics our government decides to pull. I mean, you can look back at the Great Depression, so many different things they tried to generate, economic activity that just didn't work, like the tariffs. And you can see that we're doing something very similarly right now. So it's hard to say, but I don't want to kind of downplay how bad it is already. But I do think unless there is an exogenous event or something that happens to get us out of this, like a war, unfortunately, this could persist for some time, for the next 5 years.
And Jack, we have 30 seconds left. Can you go ahead and answer that?
It depends on what the central bank and the Treasury does. They're already spending 7% of GDP on new debt. They're already spending like in a recession. So if they do nothing, the recession will be massive, but they're not going to do nothing. They're going to lower interest rates and print money. So I don't know how much of that they're going to do, but how much of that they do will determine, number one, how deep the recession goes, and also how bad the inflation coming out of it is going to be.
Okay, thank you, sir. So that is a wrap.